Oil prices are pushing higher as tensions in Iran intensify. You can see they're up again today after being flat yesterday, maybe down a little in places, up 6.66%. Hopefully that's not a harbinger. Up nearly at $80 a barrel for WTI. All this, of course, about concerns about supply, demand, the ripple effects across the global markets with the war in Iran. Traders are especially focused on the Strait of Hormuz, where any disruption could have far-reaching consequences for global energy flows. To break this all down and what it means for the sector and beyond, we're joined now by Cole Smead, CEO and Portfolio Manager at Smead Capital Management. Cole, thanks as always for joining us.
Thanks for having me.
I was just looking at one of the marine traffic maps. Some ships are getting around the corner on the Strait of Hormuz, but there's not many. Is that the key, that strait right there? Is that kind of, if that can get opened up, will people exhale a little?
Yeah, it's a really good question. You know, it's a very odd dynamic that's going on between the interaction of the state of affairs in the Strait of Hormuz, or just call it the geopolitics that we're looking at on the map and in our administrations, versus what's going on in security markets. What security markets have done so far is faded the idea that this will be a longer conflict, longer being, say, anything more than a couple weeks, which is odd. So I think it presents a real tail risk to markets. To your point, I mean, we own Frontline, which is one of the oil tankers. It's the largest oil tanker publicly traded out there, that's ran by John Frederickson. And it's a business that, you know, gets paid on a per day basis to be moving oil or keeping oil on water, et cetera. And you're seeing this big spike in the cash markets right now. At the same time, the question is how many boats want to go out and move. Who those boats are typically moving oil for is countries like India and China. And so as we hear the developments of, say, the United States providing naval and insurance backstopping to the markets that cover these tankers, you have to remember a captain's job is typically to ensure the safety of his crew or her crew and the boat. And that is the starting point for most seafaring adventures. And if you can't do that, the insurance is the second thought. Does the boat owner want the boat running? And is it cheap enough to ensure that process? And so I think what it's doing is it's taking the United States and putting them into the policy of protecting foreign countries' oil flows and ensuring foreign flag boats in order to keep the price of oil lower, but trying to have success in Iran and keeping oil prices lower are just paramountly adverse to each other. And therefore, what's going to give?
And you don't think it's possible that they can keep the boats moving through there and also win the war against Iran that they started with them?
Yeah, I believe there's a savior, but I don't believe in fairy tales. Okay, and I say that because, you know, the idea has been that because the United States had its swift success in places like Venezuela, with obviously ties to oil, that we are this surgical tactician. We are a very powerful country, but we're running into what's referred to as the escalation trap. It's the same thing that was seen in Vietnam, that once you provide presence and you become to show force, that force in your mind continues to grow bigger and bigger and bigger. And the escalation trap, or some call the smart bomb trap, bombs and wars change the minds of the people on the ground. And that ultimately, for regime change, is what you need. You need the hearts and minds of people on the ground to change. And there's already discussion of putting special forces on the ground. So the escalation trap looks like it's following its curve. Really, from a political or military perspective, this is fighting the arc of history for cleanliness. And so what we don't get is why investors think this is just going to be this cute little adorable conflict, and therefore are fading the securities that benefit from the near-term disruption of this, but really shows that the oil markets aren't nearly as, there's not the glut that was claimed, and these tensions show that this is a much more fragile system of over 100 million barrels moving to Earth every day.
So how are you playing this then? What are you doing with it?
Sitting on our hands and waiting for people to give us better prices on many of the securities involved in this. So I mentioned we own Frontline. Frontline is collecting daily cash rates that have gone up. That being said, if you look at the supply, historically speaking, we did some rough math. There's about, even include dark fleets in that matter, there's about 16 years is the average duration of the boat that's out there floating legally or illegally. That's about a 6% depreciation rate. And so if you said, well, what boats are being built in Asia today? It's roughly 3%. So we have this supply demand imbalance being provided to that market. So I think the real question is, how long does the tanker fleets really over-earn going forward? Because these risks, you get paid for risks in this life, and therefore we're going to see them over-earn for a season. So how much more added income we'll get from that? Other names would be, we own the Canadian E&Ps, we own Cenovus, we own Strathcona, newer name to us would be like International Petroleum. This is a great torque market for those players, particularly like an International Petroleum or a Strathcona. And so the torque that will go from higher oil prices affecting free cash through the operating leverage of these fixed assets, we think is very attractive for investors. Now, mind you, look at global indices. To quote the Monty Python, "'Tis merely a flesh wound from a sector perspective." So investors are heavily underweighted. The piper is playing a song, and they're going to have to pay the piper here soon if this goes on a lot longer than people expect.
All right, Cole, we'll have to wrap it up there, but thanks very much, as always, for joining us.
Thank you so much.
Cole Smead is CEO and Portfolio Manager at Smead Capital Management.